Now it's time for dessert, and it's one of the largest investment categories many people have never heard discussed. Infrastructure. Think about your day. You woke up, turned on the lights, used the internet, drove on the roads, crossed bridges, used your cell phone, maybe charged an electric vehicle, ordered something online, or flew an airplane. Behind every one of those activities is infrastructure. Infrastructure investing focuses on assets that help societies function. Examples include electric utilities, water systems, toll roads, bridges, airports, rail systems, cell towers, data centers, renewable energy, power transmission, shipping ports, logistic networks. Many institutional investors evaluate infrastructure because these assets often provide essential services. Some infrastructure assets may have long term contracts, others may generate recurring revenue. However, they're all exposed to risks. Interest rate changes, regulatory changes, construction costs, environmental events, technological disruption, economic cycles. Nothing is risk free. Understanding both opportunities and risks is what creates informed investors. Now, let's talk about one of the most unique alternative investments in today's marketplace: life settlements. Many people have never heard the term, yet institutional investors have participated in this market for decades. Here's the basic concept: a life insurance policy is an asset. Sometimes a policy owner no longer wants or needs that policy. Instead of surrendering the policy back to the insurance company or allowing it to lapse, some policy owners may choose to sell it through a regulated secondary market. That transaction is called a life settlement. A purchaser acquires the policy, continues paying the premiums, and if all contractual obligations are met, may receive the policy's death benefit in the future. Life settlements are considered a specialized alternative investment. Potential characteristics often discussed include low correlation to some traditional financial markets, exposure to insurance based assets, diversification potential. However, they also involve significant risks, including longevity risk, premium payment obligations, liquidity constraints, valuation uncertainty, regulatory considerations, manager selection risk. Like every investment we've discussed today, education comes first, understanding comes second. Only then should an investor determine whether a particular investment aligns with their individual circumstances. Let's move on to the secret sauce. Now, you may be wondering, why do large institutional investors spend so much time evaluating alternative investments? The answer isn't because they're chasing excitement, it's because they're building portfolios. Institutional investors often evaluate a broad range of asset classes to help pursue objectives such as diversification, income generation, long term capital appreciation, inflation considerations, different economic exposures, managing portfolio risk. Every institution is different. Every portfolio is different. Every investment policy is different. Alternative investments are simply additional tools available within the broader investment universe. The important lesson is this: sophisticated investing isn't about finding one magical investment. It's about understanding how different investments may work together within an overall investment strategy. Let's avoid burning today's tacos, right? I love tacos. Here are some of the biggest mistakes investors make when exploring alternative investments: investing in something they don't understand, chasing high returns without understanding the risks, ignoring liquidity. believing higher returns are guaranteed, failing to perform due diligence, concentrating too much in one single investment, ignoring fees and expenses, investing based solely on someone else's opinion. Remember, every investment has advantages. Every investment has disadvantages. The goal isn't finding perfection. The goal is making informed decisions. Let's recap everything we served today. The first course was alternative investments, understanding the investment universe beyond traditional stocks, bonds, and cash. Your second course was private equity, investing in privately owned companies and long-term business growth. The third course was venture capital, supporting innovation and emerging businesses. Your fourth course was private credit. That's direct lending and alternative financing solutions. Your fifth course was real estate alternatives, commercial real estate, private real estate, and diversified property sectors. Your sixth course was 1031 exchanges and Delaware statutory trust, educational discussion of tax deferral concepts, passive ownership structures, and institutional quality real estate. Your seventh course is infrastructure, essential assets that help economies function every day. Your eighth course, life settlements, a unique insurance-based alternative investment with specialized characteristics and risks. Wow, that's one incredible secret menu. Here's today's biggest takeaway. This is the bull bite of the week. Don't judge an investment simply because you've never heard of it, and don't invest in something simply because someone else has. Education always comes first. Curiosity comes second. Due diligence comes third. Investment decisions come last. The most successful investors aren't necessarily the ones who know everything. They're the ones who never stop learning. Here's your Taco Tuesday challenge today. Choose one alternative asset class we discussed today, research it, learn how it works. Ask yourself, who typically invests in it? What risks are involved? What role might it play in a diversified portfolio? Who may or may not find it appropriate? Don't invest, learn, because knowledge compounds long before wealth does. Let's do my bull's bottom line. Today, we pulled back the curtain on part of the investment world that many people never see. We explored the secret menu of private equity, venture capital, private credit, real estate alternatives, 1031 and Delaware statutory trusts, infrastructure, life settlements. These investments aren't secret because they're hidden. They're secret because many investors simply never take the time to learn about them. Financial education isn't about memorizing products. It's about understanding possibilities. The more you learn, the better questions you ask. The better questions you ask, the better decisions you're equipped to make. Whether you're ultimately investing in traditional assets, alternative investments, or a combination of both, remember this: knowledge is one of the few investments that can continue to compound throughout your lifetime. Invest in your education first. The rest becomes much easier. I want to thank you for joining me for another Taco Tuesday on the Unbearably Bullish Podcast. If you found today's secret menu valuable, share this episode with someone who wants to expand their financial knowledge and better understand today's investment landscape. You can visit us at thebullyoucan'tbear.com for more episodes, educational resources, and exclusive content. I'm Donald Johns, and this has been Taco Tuesday, Episode 5, The Secret Menu. This is the Bull You Can't Bear, the Unbearably Bullish Podcast. Remember, strong markets, stronger mindset, unlimited opportunity. Let's connect, collaborate, monetize, follow the herd, and remember, the best investment you can make is in your own financial education. Until the next time, always, always stay unbearably bullish. We love all of you. I'm going to do the educational and legal disclosure. The opinions expressed in this podcast are those of the host and are provided solely for educational and informational purposes. This episode is intended to increase financial literacy and should not be construed as financial, investment, legal, tax, accounting, insurance, or other professional advice. References to investment products, asset classes, company structures, or strategies are for general education discussion only and not constituting recommendations, endorsements, offers, or solicitations to buy or sell any security or investment. Alternative investments, including but not limited to private equity, venture capital, private credit, real estate investments, Delaware statutory trusts, Section 1031 exchanges, infrastructure investments, and life settlements involving varying degrees of risk. These may include illiquidity, loss of principal, valuation uncertainty, credit risk, market risk, regulatory risk, leverage risk, interest rate risk, tax considerations, and other factors. Certain investments discussed may only be available to eligible investors under applicable securities laws and may not be suitable for every investor. Tax laws, including those governing Section 1031 exchanges, are subject to change and depend on individual circumstances. Consult qualified financial, legal, tax, insurance, or other professional advisors before making investment, tax, or business decisions. Investing involves risks, including the possible loss of principal, and past performance does not guarantee future results. No investment strategy can assure a profit or protect against loss in declining markets. I appreciate you tuning in. That was a lot. Have a wonderful day.